Hello, this is Brian Resney, President of Resney Wealth Management. I'm bringing you an important update about the economy and the investment markets so you can better understand what we see in the global landscape. You know, we're continuing to see improvement in a lot of the numbers that are coming out in earnings, growth for a lot of U.S. companies, and of course, that should bode well over the longer term for equity-based prices. You know, if I look at, generally speaking, 2014, most of the indexes haven't really gone anywhere. They're kind of seesawed up and down, and lost a little bit, gained a little bit, some are kind of at a break even. This is kind of natural. Remember, nothing goes straight up, and every single month you don't see equity prices or any investment sector go up month by month by month. So often you will get a pause that refreshes. So while 2013 was a fabulous year, often when you get into the next year, sometimes you'll have a pause for a quarter or two. This is pretty common. I've been managing money for 28 years, and I can tell you that consistency with certain asset categories isn't every month. And sometimes what you may see, and this could be one of those years, where the first or second quarter of 2014, most of the equity-based prices almost go nowhere but up and down, and end the first half of the year basically flat or maybe down 1% or 2 or up 1% or 2. And then the second half of the year could take off. This happens often. Remember, all investments, not only stocks, bonds, gold, real estate, every asset category kind of goes up 2 or 3 steps. Sometimes it'll pause at a plateau and then basically refresh and maybe go often higher. As long as we continue to see growth in the U.S. economy, which we're seeing, as long as corporations make more money and sell more goods, that bodes well for the possibility for higher equity-based prices. We continue to be heavy weighted in large and mid cap in the U.S. and also small cap. Currently, we are avoiding emerging market economies and developed economies outside the U.S. because some of those on a longer term trek have been relatively weak. We've seen a slight resurgence over the last 4 to 5 weeks or so in the emerging markets, but now it seems that they're taking a short-term pause and coming down a little bit. So again, we run a strict strategy off relative strength. We want to be in those categories that predominantly are stronger on a relative performance basis, but also we're looking at those fundamentals to make sure, hey, are we growing? Are there good possibilities that we're going to make money with these asset categories we hold? Again, all these things get filtered into the equation, and at the end of the day, a strict investment strategy, which includes risk management, is going to be more important than ever. One of the questions I continuously get on my TV and radio shows is about recessions, and are we seeing a recession? Because we haven't really had one in over 5 years. One thing that I think is going to happen with the U.S. economy, we have the possibility for a longer term expansion. Typically, when you come out of a recession like we saw in 2008, GDP often will be between 4 and 6% out of the gate, and things recover pretty quickly. The economy softens a little bit, and you go into another recession in the next 5 or 6 years, let's say. What we're seeing with this particular recession coming out of 2008 is a slower recovery where the GDP, let's say, was on average 2% instead of 4. So what I think is going to happen is this expansion may last another 3 to 5 years. There's a possibility of that because there's a lot of pent-up demand and people kind of getting back to where they should be in debt load, income load, and so on. And that really bodes well for the overall economy, not only here, but across the seas. At the end of the day, strict investment strategy, which includes risk management. We are not seeing any recessionary indicators currently in any of our models. In fact, we're seeing a nice, slow, meandering uptrend in growth in the U.S. economy and other economies around the world. We're going to continue to run our strategy. We'll keep you informed, of course, if you're a client of our firm. Make sure you call us if you have any questions about your portfolio. And of course, if you're not a client, call our office for consultation. There is a difference. We invite you to experience it.